All right. Good afternoon, traders. Again, some of you. Happy Tuesday. For some of you, it's been a couple weeks. I hope all is well. For some of you, it's been a few minutes. Welcome back if you were just in the trading room. Hello, LK. Good evening to you. Someone said hello. It didn't come through with your name. Hello, Phil. Good to see you. Good afternoon, Dennis, again. Welcome, everybody, to the TradeSpoon Active Investor Workshop Series. I know there was a little confusion because the title in some places said time-based strategies after earnings. We did that one a couple weeks ago. I think I need to confirm with the administrators the headlines. Today is price patterns. Andrew, good afternoon, Andrew. Hello to you, Fad. Hello, Sunil. Good to see you. I appreciate everybody. I appreciate the energy. So today we're going to talk about price patterns. So it's going to be mostly technical. I'm not going with slides. I find slides are just a little too rigid and inhibitive. I like to have a good discussion so that we can ask questions, look at charts. What do we see? What does it tell us? I'm excited for today. I'm definitely consider myself a market technician, which means I use almost 100% primarily technical analysis to assess stocks and other securities and to create and maintain decisions, right? To decide entries, exits, when should I, things like that. So anytime we can talk about technical analysis, we should. I think technical analysis is enough of a important aspect that we should use multiple tools. So we'll talk about that, right? I mean, we alluded that a little bit today. We talked about the model as a tool, objective mathematical analysis. Is it a crystal ball? Of course it's not. There is no crystal ball. There's just tools in our toolbox to help us assess, get this stock needs to tell me a story. What's the story here? A story of bullishness, a story of bearishness, a story of consolidation. And then how does that story translate into a trade? Because if I come into a trade with a story, it's a lot easier to manage the trade, right? I know what that story could, I know the next chapter of that story. And if something else other than that happens, I need to start thinking, whoa, well, how am I going to exit this trade? Price patterns definitely plays into that. Essentially, one of the first things we should do when we assess a stock is to ask ourselves who's in control, buyers or sellers. We do that using trend. And if you ever find that you're like, gosh, it's a little hard to read the trend, the very next thing you should be thinking is I should look for a price pattern, right? I should look for a price pattern. It's consolidating. It's doing something other than a trend. And that's where we tend to see some of these price patterns show up. That's what we'll talk about today. What are the main patterns that we'll see? Where are we going to see them? What do they mean? How do we trade them? My name is Scott Beck. I'm the head trading coach here at TradeSpoon, for those of you who may not know me. I have been trading for over 20 years. I have been teaching for about the last 18. So coaching, mentoring, teaching, whatever roles within the realm of trading education. I need to remind you, as always, whoops, I got to say it. I got to remind you, as always, that trading and options in particular can involve substantial risk and may not be suitable for all investors. Please read characteristics and risk of standardized options prior to investing in them. Evaluate any strategy prior to use to understand risk and suitability. You must be aware of the risks and be willing to accept them in order to trade in these markets. TradeSpoon and myself are non-investment advisors, not registered with the SEC or FINRA. It should not be assumed that future trade picks will be profitable or will equal past performance. The information in this presentation is provided solely for general education and information purposes. Any strategies discussed, including examples using actual securities and price data, are strictly for illustrative and educational purposes. In order to simplify the math, commissions, fees, margin interest, and taxes have not been included in the examples used in this presentation. Those costs will impact the outcome of your results and should be considered. Lastly, I and/or the team of TradeSpoon may have a financial interest in the securities presented and the trade picks. Vlad Karpel, TradeSpoon founder, is also an investor and a consultant of AOS Inc., which does business as Trading Block and Money Block of FINRA and SIPC member broker-dealer firm. TradeSpoon and AOS are not affiliated companies, and each firm's material is not endorsed by the other. Okay. Bill said they finally adjusted the NVIDIA chart after the close. Yeah, I just had to, the chart will actually go ex-dividend, right? Where it actually adjusts for, the same thing happens when they pay a dividend and then they adjust for it. Bullish day today. We all saw that. Let's get some charts going here. Small sell into the close, but not very much at all. Okay, so, and again, this is recorded, but I don't have slides to go through this. I'm going to just kind of give a basic description of some price patterns. And as you think about your own trading, you want to think, where would technical analysis should fit into your trading. Where would price patterns fit within the realm of your technical analysis, right? So my technical analysis is pretty simple. I start with the standard chart. And the first thing I'm going to do is I'm going to assess the trend. What are the peaks? What are the troughs? Higher highs, higher lows, same highs, same lows. You can see that I have an uptrend here, even though there's been quite a few times where we ran into a little bit of sideways price action. So I look at trend, I look at support and resistance, I look at the candlesticks, I look at the volume. I do look at, in this case, I like an oscillator like the stochastics that helps to identify momentum and overbought and oversold conditions. I like to integrate an AI model, an algorithmic model. That's what TradeSpoon is. That provides, right? Do I look at and just like whatever the model says, do I think, oh, I'm gonna follow that blindly? Of course not. Sometimes the model and I see things the same way. I tend to like trades better when that happens. Sometimes I see it one way, the model sees it another. Well, if I take the trade, I take it knowing, you know what, I don't have everything lined up, but I might do this anyway. So I might take that with a little less risks, etc. But I like to have that to almost like an editor, right? You write a paper and you have Grammarly. I installed it on my computer so my kids could have it, and I find that it spits out ideas to me. It says, oh, you should maybe change this. And there's times I look at it, I'm like, yeah, that makes sense. And there's other times like, that doesn't make any sense. I'm not going to make that change, right? It's just sort of an automated resource that helps to provide objective insight. That's exactly what the model does, objective insight, mathematically based. Does the model know if there's bad news that comes out? Of course not, right? Does the model know if we're going to react to something said about the Delta variant? Of course not. So we have to think about that. I like to use another chart perspective. I use Heikin Ashi candles. I like to draw lines. That's how I analyze a chart. And when I analyze a chart, I'm looking for it to talk to me, to say, when is it the right time to come in? It's very easy. You should be able to go backwards in time and say, where would I want to get into some trades? Well, clearly, especially as I have these lines drawn, you'd probably want to get in there. And you notice, oh, look, that stochastics did a little turn there. Maybe somewhere through here. And you would say, look, same thing. And you start to see that these patterns, these are patterns. These are technical patterns, not price patterns. Okay, so price patterns comes when I have a harder time identifying who's in control. So there are two types of price patterns that you should be on the lookout for: continuation patterns and reversal patterns, generally speaking. And you can find them on any time frame, right? So if I were to say, oh, is there a reversal pattern here? Is there always a price pattern? Someone would be like, oh, is this a flag? Is this a... No, there's not always a price pattern. We don't need there to always be a price pattern. If I go into a different time frame, am I going to see something different? Am I going to find, no, not on this one. Do I go here? Maybe down here I find a double bottom, right? Where, and it's not quite perfect, but it came down, hit this low, bounced up off of it, came down, hit this low, then it broke through that, and that's a double bottom right there. That's a reversal pattern. So as we see this stock coming down and then going lower, what do we look for? So bottoms, right? 1, 2. If I hit a third bottom, guess what it becomes? I know it's not very creative. A triple bottom, double bottom, triple bottom. If I have bottoms, what else do I have? I have tops, right? Do I hit a high and then hit the same high? So a double top is actually, we would see that thinking this is resistance. Tops and bottoms are support and resistance levels. So that's why it's important that you key in on where are support, where are my resistance levels. Double top, triple top. So those are two of the big reversal patterns. Another reversal pattern that you would look for is a head and shoulders. It goes up and makes a higher high, comes down, and then it makes a lower high, and this creates our neckline. And if it breaks the neck, then it's dead, and we think that it's going to move the other way. So again, what are we thinking? Peaks and troughs. My peaks got higher, and then all of a sudden, the buyers failed to push it back up to the whole. That's the significance of it. What's the story that a head and shoulders tells you? Tells me that when the buyers came in, they didn't come in as strong. And then if the sellers break this neckline, it tells me that the sellers came in stronger, and that creates a bit of a reversal pattern. Okay. How do I draw my trend lines in TOS? So if you go into drawings here and you go to drawing tools, this is a trend line. So you go to drawing tools, you come in, you click it once to start the line, you click it again to end it. You can activate and move. Once you have that drawing, you can move it around and change its size and whatever else. I think I make it seem easier than it is. It can be a clunky drawing system. Ed says, I like the double bottoms and I cannot lie, right? Okay, right? Those would be something we would see, on a regular basis. Is there a double top on the chart today? It depends on what chart. I mean, this is the SPY, and not really. We just made a new high only 5 days ago. We made a new high. And then we came down, and if you're looking at the broader peaks and troughs, this is a trough. This was the last trough. This was the last trough. These are just consistently higher, 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 higher. The highs are weird because it got to this high, and then it did ease a little higher up, and it didn't quite get as high, but that was still actually higher than prior. This was higher. This. So, on a 1 hour chart. Yeah, let's take a look. On a 1 hour chart. See, I don't think we've actually, this is, we can see we had this thing moving up. That would maybe, yeah, is that what you're talking about? But that would have been back last week. We hit a high, we came back down. We hit the same high, we came back down, and then we broke a little lower, and then we started this descent. For me, now this is not a standard price pattern, but I'm always kind of watching the consolidations to see, do the buyers regain control? Absolutely, for me, they've regained control today, right? It popped back up. Now we get to see, which way it may go. I think we're a little bit in no man's land, quite honestly, here, for me personally. But yeah, I would say we definitely had a double top back here. And then we confirmed it when we broke down through this, right around this level. And then it definitely fell off. And then obviously we had a little bit of that. This market's prone to these V patterns where it just like, bing, comes right back up. And I keep wondering when we're going to be done with those, but they just keep coming. So I don't know. Go figure. Okay, so reversal patterns. Those are your primary. They tend to be bigger. They take a little longer to take shape. Then you have your continuation patterns, right? Your continuation patterns are going to be things like triangles, okay? We have 3 types of triangles. I don't see any really great representations. I guess maybe back here you can kind of say that this was, whoops, we had a little bit of an ascending triangle, up, down, up, not down as much. And then when we broke it, then what do we expect? Now, one thing about patterns is they help to measure moves in order to project what's going to come next. So that one did work. So with triangles, you have three types of triangles. You have an ascending triangle where the top is the same and the bottom is coming up. And the expectation typically is that it goes that direction, ascending triangle. You have a descending triangle, which tends to come the other way, right? So we tend to see something like this. The lows are staying the same, the highs are coming down. Now, the expectation typically is this to break to the downside and then continuation patterns. However, if it were to break the triangle this way, I would say it invalidates the triangle. I'm no longer thinking continuation to the downside. And if it did a higher low reversal, right? So for me, that is an interesting price pattern in and of itself. When we see things that are consolidated, and we've actually seen this a lot recently. The other type of triangle that we have is a symmetrical triangle. Right? The highs are coming down, the lows are moving up, and we have kind of a coil or a symmetrical triangle. Whatever the prevailing trend was. So if the prevailing trend had come in from here, my expectation would be more to the downside. Not only, but more. If it had been coming in from this direction, it would be more of an upside. So again, I generally look for a continuation, but I'm absolutely open to it going the opposite direction, right? And here's what I would say to you. If any of these patterns you're like, yes, Scott, yes, I have seen that. That's it, right? It's a funny thing sometimes, price patterns, because I've worked with other technicians. They're like, oh yeah, look at this descending triangle. And I'm like, huh, I might see it a different way. Well, at the end of the day, that trader has to trade what they see, and I have to trade what I see. We could both be right, we could both be wrong, but at the end of the day, the patterns you see are the patterns you should look to trade. It's a lot like cloud formations, right? There's definitely art in this as much as there is science. But what we're looking for is we're looking for whatever pattern you see to help create the story that you're trading. Is it a bullish story that you think price is going to move higher? Or if it breaks out, it's going to move higher? Are you thinking it's going to move lower? Does it help you to understand how much of a move to expect? What should my upper target be or my lower target be? Does it help you understand time? A lot of times the width of the pattern helps us to project the subsequent move, right? Bill says perception is in the eyes of the beholder. That's it. That's facts, man. It's a funny thing. You could try to trade. If somebody else said, here's my system, here's my rules, you could think you were following it to the T, but then you get to the nitty gritty, right? The devil is in the details, my friends. When you get to the nitty gritty and you think that you did exactly what it said, they're like, oh, well, that wasn't a higher low. That was this. You're like, well, that's not how I saw it. So, what you're looking to do as a trader is learn, absorb concepts that make sense, integrate it into what you're doing, and then utilize it to make your decisions. So if you think, man, I have seen that there's things that happen over and over, price patterns do happen over and over, right? Let's go through some charts. So there's triangles. Then there's variations of triangles that tend to be a little smaller. You'll hear about things like wedges, pennants, and flags. So triangles tend to last a little bit longer, whereas wedges, pennants, and flags that are these smaller consolidations. Yeah, sorry, Devin. What I showed you was exactly what I did. That's how you get these lines. So if you notice, if I click activate drawing, it turns blue. right? And I can move that line around. So if I say activate, I can move this line up or down. So the first thing oh, what did I just do to it? I just lost it. Activate drawing. Huh? I lost. Nope. Now I want to duplicate drawing. And then activate and then move it down to here. So, oh, it's snapping on me? Is that what it's doing? Terrible. Terrible. Now I lost my drawing. Stop snapping. There is a snap to feature right now that is killing me. Why is it snapping like that? Never mind. I'm going to have to go fix this later. But in order to move those, like I said, it can be clunky. In order to, yeah, I draw these lines, right? You draw a line and then you can activate it and then move it so that it is representative of what I want it to be representative. When I click again, now it's locked in, right? So all these are your drawing tools. This is a horizontal price level. This is a trend line. These are Fibonacci retracements. These are channels. These are all different ways that you can draw. Once you're done drawing, you'll notice as I clicked, it started drawing again. You have to go back into drawings and then select one of these two pointers again, or else you'll just draw an infinite number of lines. And you can see some of these are lines that I'm just not interested in. And I can start to remove them. I'll probably remove this one, and then I'm back to what I had. So hopefully that makes sense. But if you're going to draw patterns in, right now you can see I'm drawing with my webinar tools. This is a shoulder, this is a head. If it goes up like this and turns over, that is a small scale head and shoulders, right? If you want to draw that, you would have to use those lines like I showed. These are just webinar tools, so this won't stick. It'll erase when I'm done. If you want it to stick and be there tomorrow and then the next day, you definitely have to come in and use these drawing tools here. Okay. Okay. So now, this could be considered a flag, right? So again, just kind of think, what does it look like? If it had consolidated like this, that's more of a pennant. If it consolidated like this, a pennant kind of angled down, that's more of a wedge. Could somebody be like, Scott, that's not a flag, that's a wedge? Sure, they mean the same thing. You see a wedge, I see a flag. Potato, potato, my friends. There's no dogma behind price patterns. The price pattern just indicates you see some sort of a price consolidation. The sellers came in, right? Now what? Well, if they don't do much, then I start looking for the buyers. And I'm saying, is this an opportunity? If this is a flag, I would expect this to break out and then make another pull. That's a pretty specific thing. That's a lot to ask, right? I might look at that trade and say, you know what, I do feel bullish, but I don't think it's going to do that. I think it might do this instead. And I can still trade that, right? I can still build something off of that. But I do need to come into this thing with some expectations. And as you evaluate your expectations, ask yourself, how many times has that happened? I've got one big move here and one pretty big move here. Little bit smaller, little bit slower here. That's what I'm hopefully trading for, is the next piece of a trend. So the price pattern can help you to start developing how far and how long, right? So again, if any of these you want very specific details of exactly how they're drawn, yeah, go to Google and say, Google, tell me about wedges as a price pattern. Tell me about flags as a price pattern. Tell me about head and shoulders, double top, triple top. I actually invented my own price pattern. Some of you may have heard of this because it had a little traction back in, I don't know, 2005 or 6. I called it the shrunken head and shoulders. And you'd see it go up and come down, and then go up and then come down. and then come back up again. Shrunken head and shoulders, right? And someone else might say, Scott, that's just a cup and handle. And you're not wrong, but I could still call it a shrunken head and shoulders if I want. You're not going to tell me otherwise. So again, when do we look for patterns? We look for, I mentioned candlestick pattern name that I use. Okay, let's talk a little bit about candlestick patterns, because theoretically, candlestick patterns are price patterns just in small versions, right? There are 69 major candlestick formations, 69. And what happens is we get bogged down learning the candlestick patterns rather than considering the implication of the pattern. That's what I want you thinking. What is the implication of a double top? That we can't break through resistance and then we break through support. That tends to reverse things. What is the implication of a head and shoulders? The sellers or the buyers are capitulating. They didn't get it as high as they did last time, and then the sellers are gaining control as they break support. That's a head and shoulders. There's implications behind that, right? There with 69 candlestick formations, it's just you'll lose yourself trying to learn them all. Top 10. Go to Google. Top 10 candlestick patterns. Read a couple of different sites, and you'll see over and over. What do we see? We see dojis. We see different types of dojis. Dragonfly doji, tombstone doji. We see stars, morning star, evening star. We see engulfings, right? We see piercing line and dark cloud covers, which are almost engulfings, but not quite. We see haramis, which are inside days. We see those types of things over and over and over again. Here's what I'm going to tell you. If you haven't gotten into candlesticks, or you have, but sometimes find yourself not as satisfied as you would like with your analysis, context matters always, right? When we looked at a symmetrical triangle, context mattered. Was it an uptrend, then a symmetrical triangle, or a downtrend and then a symmetrical triangle? A hanging man. Let me show you. This is a hang. Whoops. Oh, come on. Hold on. I lost my dramatic pause. This is a hanging man. And this is a hammer. Aha. Right? One is a hanging man. One is a hammer. This is a inverted hammer. And this is a shooting star, falling star. What's the difference? The hammer I would expect to find at support. The hanging man I would expect to find at resistance. Context matters, right? So if you're looking at candlesticks before you've assessed support and resistance, you're going to find yourself having a hard time determining which it is. So if you've ever had a hard time, you should say, hey, what do I tend to see? And again, you're not always going to be like, oh, well, this is clearly a hanging man followed by this, and now we're going to go down. Okay. In hindsight, you'll be able to find those explanations. But remember, we're looking at the hard right edge. So we're trying to see, again, what's the story here? What is the story Apple's telling me? The first thing Apple is telling me is I'm in a bullish trend. I just made a new higher high. And now, as of today, I've made a higher low. Right? That's what it's telling me. So there's no real pattern to be found in here, at least not as of yet. Now, if this trend is a trend, it's going to go make a higher high, then a higher low, then a higher high, then a higher low. And if that's what's happening, I'm going to look to try to catch this, and then try to catch this, and then try to catch this. And as long as it's trending, I have a nice ability to trade the stock. That's why we look for uptrends. But what if it only goes to here and then it comes back down? Is that a double top? Not yet. A double top is not a double top technically until it breaks the prior low. Then it's a double top, right? Because it might come down and go up here again and then say, oh, that's a triple top. It could be. It could also be, someone could also say that's an ascending triangle, right? These things can appear. So let me show you. I used to do this. I would be given a live presentation, and I'd go to my board and I'd come up here and I'd draw this. And I'd say, "What's that?" And inevitably someone, and not always in this order, but someone would say, "That's a double top." And I'd say, "Oh, what are the implications of a double top?" "Oh, it's a reversal pattern." So if you believe that's a double top and it's a reversal pattern, you would think the stock is going to go down. And then I'd say, "Does anybody see anything else?" And someone else would say, "Well, wait a second. If I connect these lows, that is an ascending triangle." What are the implications of an ascending triangle, I would ask? It's a continuation pattern. Therefore, we think the stock is going up. And I would say, okay, so what do we know? This stock is either going up or down. You're welcome. Pretty insightful, right? It's either going up or down. I know some of you are shaking your head and being like, "You think that's funnier than it is, Scott?" And maybe I do. But here's what I know. It's potentially both, and right now it's neither. Right? Neither of these things has broken. For this to be an ascending triangle, it's got to break through this resistance. Then it's an ascending triangle. For this to be a double top, it's got to break through this low. Now it's a double top. Because it could just meander. It could turn into a symmetrical triangle. It could turn into a rectangle, which is just a channel, right? Fat asked, are these all applicable to day trading? Yes. Any technical concept is scalable across time frames. That's how we know the validity, right? So yes, can I go into a 15-minute chart, 5-minute chart, and find these same types of situations? Yes. Yes, 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 absolutely. Okay. How and when do I trade double tops? Well, like I said, this wouldn't be a double top until here. So that's when I would look to start trading more bearishly on the reversal, right? Let me show you. Now, this is not a well-known price pattern. This is the Scott Beck consolidation reversal. Here was a consolidation. I can draw a pretty clear line coming down. And everything along the way didn't mean much yet. This actually tried to make a double bottom here, but it never really broke. And then it tried to make, I guess you would call that a triple bottom, and it still didn't break. But for me, the first sign of a reversal is when the buyers are able to break through the consolidation right there. And then they push it up, and then it comes back down, and then that becomes a higher low. There wasn't really a clear cut. Now you could say that's the triple bottom. This is the midpoint. That's the day it broke out right there. Great. That was fine. That works great, right? Now, is my stochastics going to help me if I'm waiting for a breakout? No. Stochastics helps you when you're trying to catch a bounce off of support. Stochastics or any other oscillator that you might use. Stochastics, MACD, RSI, CCI, awesome oscillator, whatever you might have as your oscillating tool. If you are looking for a breakout trade, breaking out of a double top or bottom, any breakout, you're not going to have this down here. I'm using this down here when I'm looking for a bounce trade. It's bouncing, right? Looking for this to turn and indicate a bounce off of a new support level. And then looking to continue to catch bounces off of support. If you're trading a price pattern, you are not trading bounces. You're trading breakouts. So you're looking to see, does it break through a resistance level? Does it have a little bit of extra volume? And if so, then you look to say, hey, you know what? That's it. That's what I'm looking for. PFE. Okay, let's take a look. Okay, so Pfizer. What do we think about Pfizer? Yeah, that's a tough one because it seems to be some kind of a up, down. This would almost be a cup and handle. And a cup and handle tends to be kind of similar to a, I mean, this looks almost like a double top, right? Like it's topping. However, it also looks like it's trying to break out to the upside. It's got big volume today. The biggest problem with today for me is the fact that it didn't hold anywhere near its high. The buyers, that's not all buyers. The buyers didn't hang on to it way up here at 41.71. They gave back 70 cents by the end of the day. For me, there's not enough there. Like I said, there's not always a pattern. There's not always a trade. What would I think in a situation like this? I would think, you know what? Let's wait to see if the sellers come back in. And then if they make a higher low, we can trade that bounce. Don't forget it's earnings season. So no matter what you're doing right now, make sure there's enough time. We are looking at some financial trades and they're days away from their earnings. If you have no problem holding through earnings, then okay. If you have a rule that says, you know what, I'm going to be closing this trade before earnings, then you'll want to get out of that, right? You'll want to get out of that. Okay. Let's pause for a second, see if there's any questions, and then we're going to run through and see if there's any patterns that stand out, just kind of going through a watch list. But that's it, right? Hopefully you can see not just price patterns, but everything else. As you're assessing a stock, you should absolutely have a good understanding of its current trend and across multiple time frames, right? Trends are different depending on your perspective, right? 5-minute, hourly, daily, weekly, they could all be different. You just want to have a good sense of which ones are important to you and what are they. You want to have an idea of where is support and where is resistance. Support and resistance will help me to understand the transition between buyers and sellers. You want to understand candlesticks. Candlesticks helps you understand supply and demand from day to day. You want to understand volume. Volume gives you an idea of conviction. I want to have a couple of other sources that can help. I draw lines to keep myself organized. I use the trade spoon model to give me an objective mathematical resource. I use Heikin-Ashi as a smoothing indicator. So there's very specific things that are helping us to understand the bigger picture from a technical perspective. Price patterns fit into that, right? Like I said, if a strong trend is in place, I wouldn't look for any price pattern other than maybe a flag or a pennant, something that's just a quick buy the dip consolidation pattern. As we start to see the market churn a little more, we start looking for bigger things like triangles and then maybe double tops and double bottoms. And if it continues from there, then there is triple tops, triple bottoms, head and shoulders, inverted head and shoulders. And they just sort of help us to understand now that the trend has paused, what is happening in that tug of war between buyers and sellers. Are there seasonal patterns we should look for? It just depends. I mean, I go look at the seasonal charts to just get a sense of year to year. How does the market tend to behave? I still expect a good amount of sideways trading here because that's what we tend to see seasonally, July, August into September. So yes, I tend to look for, if there are patterns, I want to see that what they are, but I don't have any like, oh, I expect this or I expect that. I just have, hey, there's a pattern that we tend to see. The seasonal chart can help with that. Do I use polarized fractal efficiency? No, but that doesn't mean anything. There are literally hundreds, if not thousands, of indicators that I don't use, right? Me using or not using doesn't say anything about an indicator. It just, look at this list, right? This is a list in Thinkorswim. This is starting at A's. These are all the indicators that are available to me. So if you said, do you use the Levitt convolution acceleration? No, it sounds fancy, but I don't. What about the linear regression slope? Nope, I don't use it. What about the McClellan summation index? I don't, right? I mean, you can see there's just one after the other, after the other, after the other. There's your polarized fractal efficiency. Let's put this on. I don't even see where it went. Quite honestly. I thought I put it on, but apparently I didn't. I don't know. So no, I don't use that. Not to say it's bad. If you can put on an indicator, here's the thing. If you put on an indicator, you should very quickly be able to pinpoint, is this what I'm looking for? Right? If I'm looking to catch this low before it goes up, I look down, oh, look, my stochastics is low and turns up at the exact same time. Great. Confirmation to the pattern. Love it. Right? I love that. If I put on, I don't know, whatever else there may or may not be, I should be able to quickly recognize, does that provide something that I'm interested in to help? What a flag means and the other struck. So a flag, again, a flag is just a short-term consolidation. Here's the pole, here's the flag when it breaks. So if you look at something that's going like this, theoretically, these little price actions are the flags, these are the poles. What do you have? What do you call a number of flags in a row? A parade. That's my own. That's a pattern, a parade. I'll be like, this is a parade pattern because I have 3 flags in a row. Okay. Hopefully that helps. Can we look at QQQ? Sure. Why not? Why not look at QQQ? If I didn't get to your question, bring it back up again. So QQQ, could I consider this a flag pattern? Absolutely. Right? I mean, it's not perfect, but there's the flag. Poles coming into it. Maybe not quite as steep as I'd want for a flag, but that looks pretty good. And see that, right? And you'll notice you're also getting this stochastics very close to turning, saying, hey, that might be it. That might be the new support level right there, same as this one. And now we would be looking for it to go make a higher high. And then the trend is back in place. But if it goes up and it only gets to here and comes back down, then we start thinking, wait a second, what is this now then? Right? And we want to make sure we're fluid in our analysis, that we're not right locked in to anything. Can we look at TTD? Absolutely. Why not? Let's do it. TTD. What do I have here? Yeah, not a lot. I mean, it's a pretty, I don't have a lot here. I definitely had the buyers accelerate and they went up and then it came down and then it went up and this kind of double topped right here. And then it broke down and now it's trying to come up again. I mean, there's just not much in that. This is lower than this one, so there's a little bit of weakness there. This stochastics is definitely in a good spot. That's turning up. Can I explain the purpose of market? This is just this is an indicator that people ask me about it. I really don't go into a lot of detail because it's just a perspective that I've had for years and years and years. A good friend and an old work friend, someone that I had done some teaching with and stuff, actually is the one who created that indicator. It's really, not one that I use for signals, but just one that I use to kind of keep a perspective. So there's not much for me to say about that one. Oftentimes I don't have it on when I'm teaching, but I do look at it on my own just to kind of take a peek. You can see it's really just a combination of 3 time frames of oscillators. It oscillates back and forth. You've got 3 different time frames kind of working simultaneously. That's what it is. So we're getting close to the end. Did any questions get unanswered? Are price patterns going to fundamentally change how you analyze technically? No. Is it going to help to bring a broader perspective? Yes. How do you use these patterns on a fast-moving up-down stock, especially in day trading? Same way you would use them anytime, right? You look at the pattern as the setup. If you're trying to trade early into it, you might be anticipatory, right? So here is a TTD on a day-by-day chart. So you can see it went up, and then it flagged, and then it broke. And it moved higher, consolidated. Then it went up, kind of a flag, and then it broke. And you might use that again, and it moved again. And you can see it flagged again, and it broke again, and it moved a little higher, but then it started to just meander, and then it dropped. So would I have the ability, each one of those you can see are higher lows. So you could trade in the flag aggressively, but there's no confirmation. Just like anything, you have to decide what level of confirmation are you looking for. Can you trade early? Of course you can. It's your trade. You can do whatever you want with it. Do you wait for confirmation? Sure. How much? Every trader is different. There's no right answer. There's just different answers, right? How much? What constitutes a valid signal? Well, if I look for the price to turn, if I look for it to break the pattern, I can look for it to. You'll notice that these arrows all coincided with this cross here, and this cross here. And this first one, I don't know if I would have taken because it was a lower low, but that did correspond with this cross here. So I'm just looking to see these patterns. Did I see today's reversal coming? In my crystal ball, no. No, of course not. Did I have an expectation that it might and trade into it a little bit? Yeah. If I saw it coming, I would have traded way bigger into it. So most traders were bearish, especially those with a narrative. So how accurate is technical analysis? Well, I don't know why they would be bearish in the first place. That's a bullish trend. So last week I said I'm bullish still. Last week on Friday when it started to fall, I said I'm bullish. I didn't talk to anybody yesterday, but yesterday I would have said, hey, look, it's still on this trend line. Why would I expect anything else, right? The sky is not falling because we had 4 down days. That's madness. We've had 4. That happens over and over again, right? Did I predict it? No. But have I been saying, hey, there's a good chance we may see a consolidation? Okay. Am I predicting that it's over? Well, with a couple of trades, I am. Right? With some trades, I am predicting it's over and it's going to go up like this. Do I know it's going to do that? No. Otherwise, I would do it with a lot more positions. There are many points of control and gaps unfilled. I'm not sure what you mean by points of control, but keep in mind, a lot of gaps go unfilled. There are 4 types of gaps. Breakaway gaps, that tends to start a new trend. Runaway gaps, that tends to accelerate into an existing trend. Exhaustion gaps, that tends to signify the end of a trend. And those gaps will occur within the context of price patterns. The 4th type of gap is a common gap. And as you can imagine, you'll see a whole lot more common gaps than you do any of the other gaps. And there is no expectation for common gaps to fill. So if you're going to use gap analysis, really go read into the theory behind it. And what concept, I might to be 100% honest with you, I might have explained breakaway and runaway erroneously. It's not that much of a difference, but one starts a new trend, one accelerates an existing trend. But yeah, again, here's the thing. You come to this class, and I'm not going to be able to teach all of these concepts, but I'm going to be able to open your eyes to, right? There's so much good information right now that you can just go be like, yeah, you know what? I should go read up on gaps. I should understand the difference, because an exhaustion gap is an island reversal or an abandoned baby, which is a candlestick pattern. And that island reversal could be the head and the head and shoulders. So all of these points, when it comes, will have confluence between them, where they kind of come together and tell the same story. That's why it's nice to have multiple perspectives. They reckoned when there are gaps unfilled, the market will come back to fill them. Yeah, again, very, very oversimplified. For me, whoever said that is really underestimating and understating exactly how gaps work and what our expectations should be when we see them. Keep it in order. If you remember, the first thing I said I'm always going to look at is trend. Who is in control? Who is in control? And what we're trying to understand is, what is the path of least resistance, right? What's the path of least resistance? What's it easier for it to do? Points of control. Most time volume was at that level during the day of trading. Huh. Okay. Well, that sounds interesting. I'll look into that. I'm not that familiar with that concept. But again, you saw, there are literally thousands of ways to slice and dice the technical analysis of a chart. None is more valid than the other. None is more, none is stronger or better. It's what does the pattern tell you? How well do you use it? Right? Part of my technical analysis is not always, am I sure I'm going to be right, but am I sure that my analysis will let me build the right trade? Meaning, what is the reward to risk ratio of the trade I'm building based on the indicators that I'm using? If I'm getting 3-to-1 on my money, I don't have to be right 60% of the time. I could be right 40% of the time, still be very profitable. Right? So yeah, that's what I want. Be open, be adaptive, be fluid, but be consistent. What do you look at first? What do you look at second? What do you look at third? What is your priority? What is the most important thing to be lined up based on your experience and what you've seen and how you've traded it and what worked and what didn't? Take notes. Really help yourself to find the most effective patterns. But hopefully I've opened your eyes to some things within the context of price action. Right? I love price action. Right? When it comes to technical analysis, you've got indicators, which are things that are calculated. Right? Stochastics, that's an indicator. Moving average, that's an indicator. Heikin-Ashi, that's an indicator. Market forecast, indicator. Points of control, indicator. Candlesticks are half and half. When you start to call it a name, it's an indicator, because there's a formula behind the pattern. A doji, something has to, right? It's got to be halfway up, halfway down, and close near the middle. That's formulaic. If you're just looking at where did it open, where did it close, what was the range, then you're seeing the price action. And I actually tend to focus on the price action component of candlesticks first, then I look at the patterns second. Right? To me, price action, price is king. Price is the purest representation of supply and demand. That's what we're interested in. Who's in control, buyers or sellers? So there you go. Comment came in that said there are many ways to skin the cat. Agreed. This is why I think technical analysis is only mere guidance. Prefer simplicity more than studies. Agree with you, Professor. Hey, amen, man. Amen. Less is more, right? A lot of times when I start working with people, the first thing I do is I come clean up their charts, because they have so many indicators they can't see price. Right? They have little teeny price bubble up top, and then indicator, so many. It's counterproductive. Less is more, right? Find what works and then use it over and over and over again. And there's a lot of ways to just like get distracted by a shiny new perspective. Oh, look at this indicator. And you're like, oh my gosh, it looks fantastic. But then you start using it and it's just like every other indicator. Sometimes it works, sometimes it doesn't. Hopefully using trend and support and resistance to provide context will add probability to the equation. But get those rules written, get it written down, make that the formula. Step 1, I do this. Here's what I'm looking for. Step 2, I look for this and this, and I try to identify. Step 3, I analyze this, and then, right? When do you change time frames? If you change time frames, what are you looking for when you change time frames? The more specific, right? The more deliberate we can be with our analysis, the better equipped we are to go back and tweak it a little bit in order to make sure that we're catching the patterns exactly the way that we want to. So, boom, there it is. Price patterns, technical analysis on a broader perspective. I enjoyed it. I hope you did. I had fun. It always is helpful to just kind of talk through things. And like I said, the chart should tell you a story, right? Let it tell you a story. And that story turns into a trade. And that way, if the story changes, the trade may no longer be valid. And that might help us with our exits. I will be here tomorrow afternoon for the trading room. I'll be back in 2 weeks for another one of these. If you're on the outside, just kind of looking at what we have to offer and you wanted to check this out, we've got a great range of offerings. We offer some guidance, we offer some trading rooms, we offer some technical perspective, we offer education. So if you haven't given it a shot, come in, see the inside of what we have to offer. I would highly recommend you do it. Remember, you can always get the first 30 days are risk-free. If you don't like it, if you're like, yeah, I thought it was going to be good, but it wasn't. Yeah, okay, we can still part as friends. Anyways, it's good to see you all. I appreciate you taking an hour of your day to spend with me. Still missing the crystal ball indicator, right? Me too. And Bill, I recognize I got a little behind this weekend. It was my son's birthday. I was intending to send some things out. I didn't get it. They will come this week, I promise. Okay, well, thank you. I appreciate the positive feedback to those of you who are sending it. It's good to see you all. Have a great rest of your day. And as always, happy trading.